Hello niece and nephew, this is Uncle Robert. At one point today, oil price dropped up to 10%. Is the oil and energy rally out of steam? Let's discuss. Before we go into why oil dropped up to 10% today, let's take a look at what happened a year ago. Due to COVID in April, demand vanished, but supply was outpacing demand tremendously. So what happened? Oil price dropped all the way down to, wait for it, negative 37. What? Hey there, you want some oil? Nah, no thank you. Could I pay you to take it from me? What? I can also be sure to like and subscribe to your channel if you get this oil off my hands. So before we look at why oil dropped today, let's look at a bigger picture. What a strong rally in oil and energy that we had. The energy sector is still down 20% from before COVID time. But from election time to now, about 4 months, energy soared as much as 93%. Look at Chevron, Cramer's favorite, up 66%. Another of Cramer's favorite is Pioneer Natural Resources, up 110%. Isn't this crazy? But wait for it. Check out Diamondback Energy, 250% in 4 months. If you think that is all, check out Occidental Petroleum, up 250% in the same 4 months. And the list goes on. What's more crazy if you invested in the energy 3 times leveraged ETF? Look at this. It's up a mind-blowing 700% in 4 months. Uncle Robert missed the entire rally because I did not believe in this run. This run was made possible because the supply was artificially reduced. To me, that is very fragile. But hey, who knows? As you know, Uncle Robert prefers playing options. Check out my one-day option gains in oil and energy. So why did oil crash today? Bringing down all the oil companies today. Some more affected than others. Well, as I mentioned earlier, the supply of oil is artificially reduced just to prop up the prices. What we found on Wednesday was surprising. Remember the Texas deep freeze?
So this has really been a major impact on US supply.
Many production were halted, many refineries were shut. So the expectation was for US inventories to be down 1 million barrels of oil. So what happened on Wednesday? It was actually up 2.4 million barrels. That's a surprise, a bad one. What else happened on Wednesday? Well, Jerome Powell happened. He came up, gave a dovish stance, and the market liked it. So what happened next? The market was appeased just for 1 day. Look at what happened the next day. We see 10-year treasury spiking, and with it, it pushed up the strength of the dollar. How does all this affect oil, you ask? So crude oil is traded in US dollars. So if the strength of the dollar increases, you will need less dollars to buy the same barrel of oil, hence pushing down the price. Niece and nephew might also ask, how does treasury rates affect the US dollar? As treasury rates increase, governments and institutions who choose to buy bonds would sell their bonds from other countries to buy bonds in America where the yields are higher. So the action of buying American dollars to buy American bonds pushed up the American dollars. So we talked about supply. How about demand? Well, demand is an expectation. We're expecting economies to open at a fast rate. But the hiccups in the European vaccine rollout kind of put a dent in this. And with a more cloudy outlook, the expectation for the demand is actually lower. And that is also how the price softened. So what does it mean for us going up from here? Well, Uncle Robert has no crystal ball. But Uncle Robert can share what to look out for so we can do our own assessment on where oil price is going to be. First, treasury rates. High is bad for oil. And I think this is going to go up continuously over the next 3 to 6 months. Second, reopening. This very much depends on the vaccination rollout as well as the new virus strains. Headlines like this is really not helping. Third, and I think this is most important, OPEC plus supply restriction. There's going to be many more meetings and many more disagreements. As soon as production increases, we're going to see a huge drop in oil prices. Another measure for demand of oil is manufacturing data. As country shares ever increasing manufacturing data, that would be good for oil. Next is US dollar. Uncle Robert is not a forex expert. I do not know where dollar is going, but with treasury yields, it might likely go up. So in conclusion, there are many factors to consider. The road out from here is not smooth. To put things into perspective, we're still 20% below pre-COVID times. So for long-term holders out there might still be some upside. Uncle Robert will not be holding any energy and oil companies for the long term. To be safe, Uncle Robert will only dabble in for 1 or 2 weeks after the OPEC decision.
Those energy names you mentioned in the green, that's really just a function of those OPEC comments you saw earlier.
The other reason Uncle Robert is in energy and oil trade is because tech is not really doing well right now, all because of the rising rates.
Energy is the only sector in the green.
As of Wednesday, Uncle Robert have sold out of all oil and energy. I might have survived the big drop, but I did take 5 days of losses. So niece and nephew, remember to check OPEC news, treasury rates, vaccine rollout, manufacturing data, strength of the dollar, new virus strains and lockdowns. And remember to like and subscribe for more videos like this. And if you find this content useful, please consider sharing with your friends. Disclaimer, all these are my personal opinions. These are not investment advice. Please make your own assessment and decisions. Thank you so much for watching. Bye bye!